Happy Monday, everybody. I hope you had a great weekend. Tax season is upon us. We're waiting for our W-2s, our 1099s, getting everything ready for our tax preparer, or if you do them yourself, great. I think everyone should. And with that, either you're going to get a refund or you're going to end up paying, but hopefully it'll be the first one. And if you do end up getting a refund, did you know that you can buy a home with just your refund and you don't need any other funds? And I'm going to show you how this is possible. And this is going to be in combination with down payment assistance. So let's take an example here. I'm going to show you a scenario, a single family home in San Bernardino using down payment assistance. Now this is going to be an FHA loan, so it's going to require 3.5% down. But remember, we are using down payment assistance. The sales price I'm using for the example is $350,000. Well, since we're financing 96.5% of the sales price, which is $337,750, 3.5% of that $350,000 sales price gives us that $12,250 down payment needed. And this loan is going to be a Cal Plus FHA with 2% zip and 3.5% My Home. And this program is through CalHFA, which is the California Housing Finance Association. And they are a state-funded program. And I will put the link below so you can check it out online, all the great programs and benefits that they have. So we have the base loan amount at $337,750. And if for those of you that don't know, FHA does charge a upfront mortgage insurance premium of 1.75%. And 99% of borrowers will finance that because it does not make sense paying that out of pocket. So 1 3/4 of $337,750, which is the base loan amount, gives us that $5,910 upfront mortgage insurance premium that we're going to finance. So since we have that base loan amount at $337,750, we'll add on that upfront mortgage insurance premium of $5,910. So that gives us a combined total loan amount that we're financing of $343,660. So you're probably asking me, hey, Frank, what does this all cost? Well, I'm going to show you. Let's take a look. Since we're financing $343,660, we have estimated closing costs of $10,800. This includes your escrow, title, lender fees, and third-party fees. Your prepaids estimated at $1,400. This is your reserves for your property taxes and for your homeowner's insurance. And the upfront mortgage insurance premium of $5,910, which is going to be financed, shows that you have to come in with $18,110 for a $350,000 house. Now, if we're using down payment assistance, this is where we're going to see it pay off. For those that qualify, there are guidelines that have to be met, so that's something that we can go over. So let's take a look at down payment assistance. Now, with down payment assistance, there's 2 additional loans. And these loans are silent loans. And what that means is you never make a payment on these loans. These are just liens that get recorded onto your property that are still due once you refinance or sell the house. So this money will get paid back. The great thing about it is you're not paying anything until you get to that point. So down payment assistance, we're going to use the My Home 3.5% of sales price. So that's a credit of $12,250. So you remember our down payment of $12,250. So this will wash it out. And now we're using 2% zip that we're allowed through CalHFA. And the reason why I prefer the 2% zip is you're going to get a much, much better rate. And you'll see for yourself when you go on the website. So we take 2% of the loan amount. So that ends up being $6,873. So we get that credited, and then the transfer tax and owner policy are generally paid by the seller, $1,100. So when you're looking at all of this down payment assistance, you can see what the benefit is in reducing your funds to close. So instead of $18,110, with all that credit, it just shows you coming in with approximately $2,113, which is much cheaper than rent sometimes, or if you're putting a deposit down, usually you need first month's rent, last month's rent, security deposit. So this is a really, really good tool for you if you're looking to buy a home. You just have to make sure you talk to the right person and you get qualified for these programs. So let's take a look. What is a monthly total payment on a $350,000 home using down payment assistance? So the rate I'm using today is 3.5%, and these rates are published on CalHFA's website, which you will see in the link below. So these rates are based on January 14th. Sales price of $350,000 we're using. Loan amount we're financing is a $343,660, and this is a 30-year FHA loan. Your principal and interest payment runs $1,543. Estimated property taxes, $364. Now in the state of California, we use 1.25% as a general tax rate when you are purchasing a home. This will change once a property is located and we pull a tax roll and we calculate what your new property assessments will be. Mortgage insurance premium that FHA charges, $237. Estimated homeowner insurance, $80. So you're looking at a total combined monthly housing payment of $2,224, just under $2,225. So your payment may be a little bit higher, but you're getting into it much lower. So now I want to show you the comparisons between a down payment assistance loan and a regular FHA loan. Okay. Now you'll see that the principal and interest payment is lower on the regular FHA loan, and that is because you do get a lower rate since you are coming in with your own funds. Okay. But there's not a huge difference. It's only about $71 a month, but the savings definitely outweigh the cons. So you can see that the total monthly payment is roughly $71 less. Now this is where it gets really good. Now take a look. You have the estimated costs, and then you have your down payment assistance. Okay. Now let's take a look at the estimated costs. So you see here that the costs are the same, but on down payment assistance, you have all these credits because of the additional funds you're obtaining from the state. So with that, you'll see you'll be saving over close to $15,000 out of pocket. Now keep in mind, not everybody is going to qualify because there are minimum credit standards of 660 FICO. There is a debt ratio requirement that we cannot exceed, and you have to be a first-time home buyer. Thank you guys for watching, and tune in next week when we talk about credit and how it affects your loan application. Don't forget to subscribe and like, comment. If you have any questions, feel free to send me a message, and I will see you next Monday. Have a great week, everybody.